we got new loan conforming limits, which were announced. When were they announced? This week or last week? Just announced.
This week on what day was it? Tuesday they came out.
Okay, so this is new, fresh loan conforming limit amounts for
Hot off the press.
2026. Brian's going to break that down. We have some rate momentum here over the shortened holiday week as well that we'll break down. Let's start with the loan conforming limits for 2026. Any home buyer, home shopper, you're going to want to know about this.
Yes. So I sometimes call these the jumbo loan limits, which is not really what they're called. I kind of made that up because I find that that is sometimes a way for people to understand what we're talking about. Even a lot of real estate agents I know sometimes aren't super familiar with the word conforming loan. So what this means is this is the loan limit that you need to stay under for it to not be a jumbo loan. Or in other words, it conforms to the Fannie Mae guidelines. That's why they call it a conforming guideline. So if you don't know,
And
most mortgages are bought by either Fannie Mae or Freddie Mac, and they have certain rules. And so every year, um, folks get together with and determine the loan limits. And so, why does that matter? Why do you care if you're thinking about buying a home? Um, Generally, it's easier to get approved for a loan that's not a jumbo loan or a conforming loan. The down payment requirements are lower, so you can do a lower down payment. They also allow a higher monthly payment, so it's easier to get approved. Um, and a couple other things as well. Usually, you need more paperwork for a jumbo loan. It takes a little longer. You have to give them your tax return, so it's less paperwork, faster approval. But the big ones are basically
well,
it's easier to get approved, and you could do a lower down payment. Questions so far?
No, I'll just also mention that jumbo loans are non-conforming, but there's also a category of non-conforming loans that you can go get a non-conforming loan, which means if you're a business owner and you essentially wrote off a lot in your taxes,
Hmm.
right? I don't know if I'm explaining this the right
Yeah,
way,
you're
but
on you're on the right track. Keep going.
I just kind of want to like give it a basic overview for people to understand. If you wrote off a lot of your taxes and you're a business owner, but you have high levels of revenue and income, you can show that and get what's called a non-conforming loan. So Fannie and Freddie wouldn't buy the loan. It's going to come in at a higher rate. It's a little bit of a higher risk, but you can go get loans to buy a home that is considered non-conforming, wouldn't be something Fannie or Freddie would buy, but you can go get those as well as obviously the jumbo loan category, and so I just want to offer that as
Correct. Yeah.
an example
So
there.
they'll also sometimes refer to those as non-QM, which means
Non-QM.
non-quality mortgage. Sometimes they'll call it a portfolio loan, or sometimes they'll say portfolio lenders. So generally, if you can get a Fannie Mae loan, that's often, and you have a good credit score, that's often the best option, the lowest interest rate. So that's usually what folks want, if possible. But to your point, sometimes people don't show enough income on their tax returns, and they might, or condos is another good example. Not all condos are going to meet the Fannie Mae guidelines. So,
Yeah.
like, ideally, you'd want a Fannie Mae loan on a condo, but if something's going on with the condo complex where it doesn't meet the guidelines, you might have to go to a portfolio lender that's a little bit more flexible, probably charges a higher rate for what they call a non-warrantable condo. But most mortgages are going to be conforming, and generally that's going to be the best interest rate. So that's usually what most people want. Or the other type of loan is like a government loan, like FHA or VA, which there's certain situations where that might be better, but most people are generally getting one of these conforming Fannie Mae loans.
All right, so let's break it down. The 2026 conforming loan limits for mortgages. If you're a home shopper or buyer in 26, these are the limits to get a conforming loan.
All
Go
right.
ahead, Brian.
We're still trying to wake up from all that turkey here.
Yeah,
Um,
turkey
so
face.
yeah, they went up. So previously in 2025, the conforming loan limit was about 806 for all the counties in Connecticut except for Fairfield. Fairfield was higher. I actually don't have it in front of me. I think it was like 851 or something like that in Fairfield. So I was up, actually as we were prepping for the show, I went to look up the limits, and I was surprised to be reminded that we don't have counties in Connecticut anymore. I spent 20 years memorizing what county every town in Connecticut's in, and we do not have counties anymore. We now have regional planning regions instead of
For
counties.
this, we still have counties, but right? Or
Um,
you're saying for the loans, but Connecticut still operates in counties, right?
I don't think we do. I think we have regional planning regions now.
Wait, this is like news to me. Am I totally behind the eight ball? Like New London County doesn't exist anymore?
That's
New
correct.
Haven
It doesn't
County?
exist anymore. It's now Southeastern Connecticut Regional Planning Region.
What in the world?
Yeah.
How did I miss that? When did that happen?
I talked about it on the show once, but like until it really like affects you, I think you don't really notice. Like I didn't really notice until like an hour ago I was printing out this and I was like, "Oh, there's no counties anymore." Yeah. So that's and the interesting thing is some of the towns that used to be in certain counties are now in different areas, which now have different loan limits. So this is crazy. So this is turning into an interesting conversation about that. So let me give you an example. So
So chat says New London County still exists as an example, but Connecticut counties don't function anymore.
I mean, yeah, I guess it still
Connecticut still
exists,
has
but for like anything of significance that used to be based on counties is now based on regional planning regions.
it actually says county government was abolished in 1960.
Yeah, we don't have county governments, but like area median income limits, loan limits. I mean, for all intents and purposes, everything that I'm seeing coming out, this happened like in I think it was like August or September of 2025, like pretty recently. You don't quote me on that, but it's like within the last 12 months has happened. The reason that you might care about this is if you, or maybe, your child or your nephew who you just saw at Thanksgiving, they're thinking about buying a house this year. Um, this is the low down payment range. So if you're under the conforming loan limit, you can do 5% down, and if you're a first time buyer, you can do 3% down. So if for the first time buyers, if you're under this amount, you can do 3% down. Okay, so that's why you care about the information I'm about to give you. And as we were discussing before the break, counties were essentially eliminated and replaced with regional planning regions in 2025. So that's flipped it a little bit. So previously in 2025, the limit was 806 for most of Connecticut, and Fairfield County was 851 has gone up. So now you can buy a more expensive house with 3% down right now than you could a week ago. So here we are. So New Haven County, it used to be New Haven County and Fairfield County, Hartford County, Middlesex. Now it's they with these new regional planning regions. We have Western Connecticut and Greater Bridgeport is mostly what Fairfield used to be, but there's now a Naugatuck Valley region. So this is interesting. So like Shelton, for example, used to be in Fairfield County, is now in Naugatuck Valley region. Cheshire and Prospect used to be in New Haven County. Now they're part of Naugatuck Valley. And this is why it's important. So, what used to be New Haven County, which is going to include like Branford, Madison, Guilford, New Haven, Milford, Orange, that's now South Central Connecticut planning region. The new loan limit, 832,750. So it went up from 806 to 832 and change. That's the standard across the country. So unless it's considered a high cost area. So the South Central Connecticut region is 832, Southeastern Connecticut, previously New London County, mostly also 832. But Naugatuck is 851 and the Greater Bridgeport is 977. So also Western Connecticut, which is also mostly
When
previously Fairfield County, also now 977. So pretty big
when
jump there.
when Brian's saying 977 and 832, he's talking about $977,000 on a one
Yes.
unit home, 832,000. So the lowest, the regions that have the lowest numbers, $832,750 on a one unit single family home. And the high mark is Greater Bridgeport and Western Connecticut planning regions at 977,500. And
So
then you've got the outlier of Naugatuck Valley at the 851,000.
so let me drive this home in a way that's kind of going to blow your mind right now. If you want to buy $1 million house in Stratford, Connecticut, and you're going to live there as your primary residence, and you have not owned a home in the last 3 years, as of this Tuesday, this is brand new. You can now do 3% down on $1 million house in Stratford, Connecticut.
Never been done before.
Couldn't do it on Monday, but after Tuesday, you can now do it. So that's really the big win here. Lower down payments, higher prices. If you want to find out what you qualify for, go to scheduleloanappointment.com, schedule a call, and we'll look up any town in Connecticut that you like, or any of the other states I'm licensed in, and we'll look up the conforming loan limit, and we'll see what you can get your pre-approved for.